All right, recorder's going now. I wanted to do a quick video on PAGS here, Paseguro Digital Limited. No idea what it is, I don't care. Right? What we're looking at here, and thank you to Charlie and Patrick for bantering about it. So in PAGS, we have two setups here, two potential setups. We have an inside bar here, which the high here was 45.30. 45.30 times 101% is 45.75. That's what the rationale was for when they got in. It has rallied about 20 cents since the signal went out, so I don't expect us to get fill. As you can see here, it's almost ready to set up the breakout here. We have to wait until the noon hour, and hopefully it is above the channel, and if it is, then it would set up for that too. So those are two pretty strong technical triggers, and they decided that the IB was enough and good enough for them, and the risk reward was there for them. We're trying to buy this thing at 80 cents. It's 65 bid at $1, so it's gone up a little bit. I don't know that we're going to get filled. Let me make sure that I have you want to know that if it gets to 45.40, we're off, and we're not doing anything to the upside yet because we're not in. Okay, so then the question becomes, there's a couple things. So it's a little bit aggressive, but it's such a strong technical case that I was willing to do it. Okay, so when I was looking at this, we were trading 45.71. Right now we're trading 17 cents higher. And we don't have weeklies here, so I was like, okay, let's go out to SEP. But then, remember, during this time of the year, you have to watch out when earnings are. Earnings are the 15th. Okay, so you're like, well, Mike, that's only 2 weeks. Yeah, but oftentimes stocks rally into, especially strong stocks like this tend to rally into earnings. Whatever happens with earnings, who knows? But the other thing is that we're probably not going to experience the decay that we normally would, because we have earnings coming up on the 15th. We would be out of this. It would be not my intention to take this through earnings, so we would be out of it. So I don't think that we're going to get decayed to death here. So that's why I said, well, let's just stick with the August. So the August, we were trading 66.90 at the time. We're trading 68%. But as you see, that the target there, and I want to be conservative here, the target was 51.20 for the 59% confidence interval. Well, 51.20, you go here and you're like, well, I only have $2.50 wide strikes. I don't want to target 52.5, because that is more than a standard deviation, even for earnings. So what does a 47.5 50 look like? We know that we're trying to buy this at 80 at the time. 45.5 50, we know that's going to max itself out at 50 or higher for 80 cents. Well, that's only 2.13 to 1. But realize two things working in our favor. One, we're not going to experience the decay that we normally would. And two, we're targeting a full 2% lower, more than 2% lower in the underlying stock for our target. So that's why I'm willing to take a little bit less than what we normally would require. Of course, we're not filled yet either, so the whole discussion could just be an academic one, but still, I wanted to get my rationale out to you. Any questions on that? Like I said, I did record this. It's a relatively quick video. And hopefully we get filled and then it takes off. But it's like they heard us coming. It takes off 20 cents from where we were trying to get in. Okay, I'm not seeing any questions being typed. Oh, wait. Nope. Sharif is. I see you typing, Sharif. I think. So I'll wait for that. No, I'm not going to update the price. I'm not chasing this. Remember, we're already taking less than what my range for vertical spreads are typically 2.33 to 3 to 1. Anything below 2.33 is usually not enough reward to risk. Anything above 3 to 1, I'd say, well, you know what? I'll take less reward to risk and move my strikes in closer to at the money. So I increase my probability of profitability. But and this is only 2.13 to 1, so we're already below that that threshold, but I explained why I'm willing to take less, because we're targeting much less than where we normally target. Good question, though. And and Scott and I approach this the same way. You draw your line in the sand and say, hey, this is my bid. If it gets hit, great. If it doesn't, you move on to the next one. You don't go chasing it. And just the idea is not to get filled. The idea is to get filled at your price, because the analysis says this is the amount of capital I'm willing to put towards this idea that I have, not just to get in. That's why you never see market orders or anything like that. Okay, so let me get the recorder off here. If there's no other questions, let me go through here. Looks like Sharif is typing again. And if that is the case, you got it. Good question. And these are the type of questions you need to know for your own sake, and also, hey, if it sounds like something that me or Scott or Charlie, you're like, hey, I don't understand the rationale here. It seems like you're going off the rails. You're being too aggressive. Maybe we are. There's a possibility that we are, but that's why we need to be able to explain why we're making the decisions that we are. Yes, I'm going outside of my normal risk reward, but I am also taking less risk by targeting the lower strike. Okay, great. And let me get this video out to you guys as soon as I can.